Well then, it's time to expose this whole mess.
Here's how we take everything from these idiotic traders. The whole system is rigged against them. It consists of several levels, from the first ones for the dumbest, where only a fool will give away his money, up to the ultimate trap that will ruin even the smartest ones. Forex brokers, prop firms with demo accounts, huge advertising budgets, trading software, indicators, and ultimately, Forex gurus, signals groups, and other nonsense. Whose money do you think they exist on? All of this is paid for by retail traders who dream of making a good profit. They bring their money to them themselves and are doomed right after they hit the deposit button.
But nobody will just give their money away. I only have one question. How does this system work? How do you take all the money from these so-called traders? After all, it's not that simple. Very different people come to the market, from those who only need to be shown a photo of an expensive car to dump all their money into one trade, to those who look deep into the candlesticks and gather years of statistics on a strategy.
Yes, they are different people, but that only means we will take their money from them in different ways. There is a trick for everyone. If he didn't lose his money on the first level, he will lose it on the second or third. The outcome is the same. They all give away their money and don't even realize where they got played.
I didn't quite get what system you are talking about. Could you explain in more detail?
It's better to see it once. A perfect example. Another naive beginner. Watch closely exactly how he will lose all his money.
Well, on a serious note, it's time to break down what these tricks are and how almost every trader, actually, most likely, just like you, will end up penniless, blaming a bad trend line, an order block, or whatever else. The first thing a trader will face is the 98% win rate signals, courses that promise easy money, copy trading with hundreds of % in returns, and all that kind of stuff. This is where the most naive drop off, when the signal fails, and instead of the promised 100% a month, the strategy yields minus 100% in a week. These are people who believe in miracles and quick money, but saying that bad signals and poor education are to blame for the failure of over 90% of traders is foolish. They are just the tip of the iceberg, or rather, it would be more accurate to say they are merely a consequence of the entire system. Ask yourself, why are there so many unprofitable signal groups, copy trading services, and things like that? Why is it so hard to just provide at least somewhat consistently profitable signals? No, seriously, what exactly prevents building an even slightly profitable strategy? What's the difficulty? After all, think about it for a second. If you consistently trade at a loss, great. Just open reverse positions and you'll have a consistent profit, a gold mine. But even this trick won't work. This is exactly where we come to the real reasons why your entire capital will be taken from you. Personally, I highlight 4 main reasons how they will leave you with nothing. And as you go further, they become trickier and trickier, ultimately leaving you no chance at all.
But what if we are dealing with someone who isn't going to fall for these stupid signal ads?
Oh, we can always just take their money. It's blunt, of course, but effective.
And it's true, this is nothing new in trading. But they don't just blatantly rob you here. It's not some stupid scam. You will hand it over yourself. It's simple. They will play on your emotions. Step 1. First, your money has to end up in the right place. On an exchange, with some broker, or in a meme coin controlled by a couple of guys who created it. And so you see not an ad, but a friendly recommendation from your favorite influencer, and you are already rushing to buy it. You fell for it. And it's one thing to invest 2 to 3% into a project. Well, maybe 5, hit or miss. That would be logical for you. But for the creators, at this rate, they won't make much. Therefore, step 2, trigger greed. This is where they will help your emotions take over your mind. A couple of promises, a few personal success stories, maybe some pretty pictures with expensive cars, and you're already putting not 5%, but a full 50% into an absolutely useless meme coin. Why? Well, you don't want to miss the opportunity to live just like in the picture. And in that case, there is already something to profit from. Step 3, take the money. Fake pump or without it, and almost the entire supply is dumped into the order book, wiping out all liquidity. The price is near zero. Let's say you deposited 10,000 US dollars, but now you can only withdraw $10. It's not hard to guess where the money went. That's it. Now you can start all over again. The exact same picture occurs on futures, on unregulated B-book brokers and all that kind of stuff. The scheme is exactly the same. Step 1, you see an ad, you make a deposit. The money is in the right place. Step 2, trigger greed. A couple of promotional emails, ad banners, success stories about how profitable it is to trade with high leverage, and suddenly you are increasing your risk. Step 3. Massive slippage during some news event due to low liquidity, and the money stays on the platform while you go make a new deposit. And that's about it. Once you started playing this game, you would become a victim either way. The only question is whether you lost 10% or 100%. People greedy not because they're bad, sometimes it's just part of their nature, and some take advantage of that.
And that's how we take everything from them.
Smart. But far from everyone over-leverages. Far from everyone deposits money into firms with a shady reputation. You can't liquidate those. You can't take much from them. What do we do with them?
Oh, they will ruin themselves. It will just take a little more time. Almost all of them trade on crypto exchanges or CFDs. Do you know their commission rates?
Yes. Now it all makes sense to me.
I bet you never considered commissions, slippage, swaps, spreads, and other expenses as the reason for blowing your accounts. But you should have. Slowly but surely, they drag even profitable traders into the red. Things are the saddest for day traders. They often have a lot of positions, and their stop losses are tight. You can see the calculations on the screen. Just commissions and slippage alone can take from 1 to 8% per month, and sometimes even much more. And this is with a conservative risk of 2%. But that is only a part of it. I didn't factor in swaps. Slippage in reality will easily be 1.5 to 2 times higher. And even more, holding a trade overnight can widen the spread and you will get stopped out, even though the chart on TradingView hit the take profit. This is exactly what kills a ton of profitable strategies. Instead of profit, you walk away with a loss. And that's even assuming a profitable strategy, which only a tiny percentage of people ever reach.
What will we do with those who are capable of understanding this and therefore bypassing it?
Don't worry, they will ruin themselves. Human nature literally rebels against them when they sit down in front of a chart.
And it's true. Emotions interfere with absolutely everyone. Some more, some less. I've already talked about greed, but that is far from everything you will face. Let's do it this way. I will give you 12 clear examples of the actions emotions lead to. Each of them will send your deposit to the grave. And if you've done at least 8 of them, then you have to watch this video to the end. You are in a position. The price is approaching your stop loss. Damn, what if it sweeps it by just a pip right now, reverses and goes to the take profit? You are so afraid of this that you widen your stop loss over and over again when the price gets close to it. You hit a streak of take profits. You believed in yourself, increased your risk, hit a streak of stop losses, blew your account in just a few trades. After you've moved your stop loss 3 times already, on the 4th time you just remove it completely, thinking all or nothing. You are terrified by the thought that if you don't remove it now, and the price drops a little, reverses and hits the take profit, you'll be blaming yourself for the next 2 months. The price almost reaches the level you want to enter from. It hovers right near it, but just won't hit it. You enter prematurely because you're afraid of missing the trade, and as a result, a terrible entry point. You hit a streak of stop losses. The account is in a drawdown. You want to recover it quickly. You increase the risk. The account just blows up even faster. After winning a couple of intraday trades, you get a feeling of omnipotence, that you're on a real hot streak, that the market is moving perfectly logically right now. You open dozens of positions, but when the stop losses start hitting, you don't stop, but instead open even more trades to win it back. The price is approaching your take profit, but why close it here? It's growing steadily. I'd better move the target and get even more. It's so far from the stop loss anyway. It always feels that way, yet you end up getting stopped out. You found the perfect setup, completely textbook. If I miss it, I'll regret it. So I'll risk everything on this trade because it's flawless. But alas, it failed to play out. It seems to you that by trading one asset, you are missing out on a ton of profit from others. What's the point of trading one and making 1% when you can trade 10 assets and make 10%, since the strategy is the same? The result? Losses on every single asset. The price almost hit the take profit, but returned to your entry point and even continues to drop. It's already around your stop loss. Thinking that you should have locked in profits when it was almost at the target, you exit manually somewhere halfway to your stop. But eventually the price reverses and hits the take profit after all. Someone posted their monthly results, showing tens of % in returns. There is only one way for me to get that much: increase the risk. The logical outcome is blowing the account again. Anger at yourself because you can't replicate the results of those very traders you are subscribed to. Every stop loss brings massive anger at yourself for making a mistake. So you spend entire days staring at the charts, trying to get the same result as your idol. All these problems are typical for absolutely everyone, and they drag you to the bottom. And we haven't even considered external factors: pressure from friends, family, the need for money, dreams of success, and most importantly, the constant pressure from social media. Everyone is doing great. Nothing but take profits, payouts. Everyone is trading in the green. It turns out you're the only loser, and you need to fix this fast.
This is what happens. It is incredibly hard for them not to drive themselves into a trap. Sooner or later, it will happen to everyone.
Yes, emotions will destroy almost everyone. But there will be those who can control them. Such people are rare, but they exist.
Such people do indeed exist. But for them, we have prepared something special that they absolutely won't be able to bypass. No matter how smart they are, they will have to give up their money. The market itself will do it for us. It was built to take their money. Their strategies will simply stop working.
And this, in my personal opinion, is truly the hardest stage. All the ideas that will be mentioned next are merely the result of my personal tests and observations. You can agree with them or not. I absolutely couldn't care less. All retail analysis and strategies are built on finding repeating patterns, and this is exactly what often serves as a trap. Relatively speaking, the Nasdaq has been growing steadily since 2008. There have been almost no drawdowns, and if there are, the asset hasn't fallen by more than 20%. And this has been going on for 10 years. The trader made a solid profit on the growth. Everything works just perfectly. The asset drops, a heavy buy, growth, profit. And now the asset dipped again, just by 5%, but this is already a good entry point. Wow, even by 10%, that's even better. I'll buy more. Unbelievable, it's already down by 20%. This is the best entry point in 10 years. I'll leave another 5% just below my liquidation level. If it hasn't fallen lower in 10 years, it won't fall now either. But, as always, sooner or later a black swan event will occur, and it will happen. Just like in 2008, or like recently in early October in crypto. An event that seems completely unbelievable to everyone is not taken into account. And when it happens, the money evaporates. Let's consider a more down-to-earth example that is probably familiar to many. You started trading some new setup. The results are excellent. Your point of interest gives a reaction time after time. It seems that after all, that YouTube video actually gave you a magic zone where the price reverses. But the happiness doesn't last long. After some time, everything happens exactly the opposite. The zone just gets broken through constantly. No reaction at all. The trader re-enters again and again, because if the zone worked before, it will work now. But alas, the trader loses everything even before the zone starts working again. What is the reason? The performance cycle changed. So that you understand me, I will give you an example of the performance statistics for a point of interest over 10 years. The point of interest here is the sweep of the Asian session. +1 means the zone gave a reaction. -1 means it was ignored. Over 10 years, we can see constant shifts between cycles of performance and ignoring the point of interest. If you trade during this cycle, God willing, you'll break even, and that's only if you get very lucky, and you can analyze for 5 hours every day, it won't help. A similar chart will be different for each point of interest, but the essence remains the same. Almost every zone performs differently in different periods. This is the main reason why intraday setups stop working and take your entire deposit with them. Exactly the same thing happens with swing setups. Let's say you are trading reversals. Gold has been consolidating for a year. Everything is just great until this rally begins. According to your strategy, you should fade it and trade against this movement, which is exactly what you do. And just like that, the deposit is gone. The reason? The global cycle changed. For a year, the price was in consolidation, and reversal setups yielded profit, while continuation setups yielded losses. Then, after the cycle changed to an aggressive trending movement, everything flipped exactly the other way around. The problem is that predicting the shift of this cycle is impossible, which means that at any moment, a previously profitable strategy can destroy your entire deposit. These 3 reasons are hardly obvious to traders and are almost never taken into account in trading. But what is emphasized instead is the attempt to understand price movement. I used to believe in this myself. Now it's just ridiculous to me. They try to understand everything, but no one has succeeded yet. Somehow it turns out that after hitting a stop loss, everything was perfectly logical in hindsight. You just didn't grasp that logic. Right now, I see this as a dead end. Well, this video holds the answer to the question of why it's incredibly difficult to find a 100% unprofitable or a 100% profitable strategy. Steady positive returns on a backtester can easily become steadily negative in reality when other expenses are added. Fantastic profits from a strategy in 1 year can be completely lost the next year when the performance cycle of the point of interest changes or the global cycle changes. And so, it turns out that the foundation of strategy development, the analysis of patterns, often becomes a trap for traders if they use too narrow a period of time.
Yes, that will definitely finish them off. Because no one is going to look into this anyway. They will just go right back to trying to understand the market.
Exactly. As I said, the system won't let them keep their money. There's a trick for everyone.
And what do we do with those who even bypass all of this?
There are only a few of them. They are no danger to us. Plus, we still have a couple of tricks left up our sleeve.
Of course, there are no mystical manipulators holding the whole market in their hands. They are in the video just for viewer retention. I hope that's clear to everyone. One way or another, this is roughly how I personally understand the reasons why traders lose money, at least for now.